No, let me put it this way, bad underwriting is ownership neutral. It could happen in public sector or private sector. Therefore, ownership alone does not decide the quality of underwriting.
Good morning. Welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Meghana Doshi.
Good morning. I'm Ira Dugal. Let's get you the headlines this Monday morning. China's manufacturing index registers its first increase in 4 months. 51.3 is the read on the PMI. At least 3 automakers have ended FY18 on a high, with Maruti, Tata Motors and Royal Enfield reporting double-digit sales growth in March. It's a busy day at the National Company Law Tribunal, with Binani Cement and Jsw Steel cases coming up for hearing. And Santhana Technologies and Karda Construction are the first 2 companies to get listed on the bourses in financial year 2019.
All right, Neeraj is missing in action today. He's enjoying the long weekend, so his weekend continues. And Agam stepped in to take us through what the market setup's looking like. Right. We come back from 4 days of holidays, and in fact, in some parts of the world, today is also a holiday. So I know some key Asian markets like Australia are not trading. Yes. What does it look like for India trade?
Well, much to catch up with. A lot has happened over the weekend. I'm going to start off with the Asian markets. We're looking at a positive opening. Implications on the SGX Nifty. Well, the SGX Nifty is down by as much as 0.2%, but we must remember that it has also advanced as much as 125 points over the course of Thursday and Friday. So we'll have to wait and watch whether the Nifty catches up with the SGX Nifty or the SGX Nifty then corrects to the levels of the Nifty. But we'll have big changes coming in the Nifty as well. So we will have inclusions of Bajaj Finserv, Grasim India and Titan take places of Ambuja Cement, Aurobindo Pharma and Bosch. Of course, ICICI Bank, which is in the eye of the storm, this is on conflict of interest concerns at the bank. We will also have auto sales in focus. We've had very strong sales for Maruti Suzuki, Tata Motors and Royal Enfield. We're also awaiting sales, that is the March volumes for the likes of Mahindra and Mahindra, Ashok Leyland and the likes. Of course, we're expecting very strong sales for two-wheelers. Tata Power sells its defense business in Tata Sons unit at an enterprise value of 2,230 crores. And as we've already mentioned, we are looking at 2 listings today. Santhana Technologies, that's the auto ancillary, and Karda Constructions will list on the bourses today.
Okay,
right.
That's a cursory mention of ICICI Bank. I know we're going to talk a little bit more about that, but Axis also?
Axis also. Economic Times are reporting this morning that they have heard, or the board or the chairman has heard from the regulator saying that they should reconsider the 4th term given to Shikha Sharma. We all know the background to this. Her extension was expedited when there were all these concerns about whether she's leaving or not leaving. And then, as a matter of procedure, you have to send it to the regulator. The regulator has to approve the appointment in the case of private sector banks. So Economic Times reporting that the RBI has written back to the bank, which is not common.
Yeah, I think they're reporting based on, obviously source-based information.
Yes.
This is not confirmed by the regulator via any comment, etc. That's stated clearly in the story. But nonetheless, that's going to be of concern, to the stock, and the fact that, both top private sector banks in the country, today at least,
that's true.
Will be, as Agam put it so perfunctorily, in the eye of the storm. Yeah. Well, all right. On today's first word, ICICI Bank, of course, prime position. The bank and its board has thrown its weight behind its CEO and Managing Director Chanda Kochar, but still plenty of unanswered questions. And of course, if you weren't tuned into all the news through the weekend, you also know that the CBI has initiated an inquiry of sorts into the loans that were extended by the Biocon group to New Power Renewables, a company founded by Chanda Kochar's husband, Deepak Kochar. As yet, Chanda Kochar herself doesn't seem to be under investigation, but we'll talk a lot more about that in just a bit. We also have for you all the insolvency action. Both cases today are being heard in their various NCLTs. That's the Jsw Steel case in the NCLT in Ahmedabad and Binani Cement in the Kolkata NCLT. So we'll bring you up to date on what to expect on both of those. And finally, some news that's trickled in through the course of the weekend, and that is auto sales. We've got some numbers. They're looking very good. And we've got some more numbers to go that will come in today. So we'll give you a sense of what to expect from the remaining data that has yet to be posted. But let's start first with ICICI Bank. Ira. It's been a long, busy, hectic weekend. Not all of us enjoyed a long weekend, did we?
Well, actually, I mean, so, it was, but it's not like there has been dramatically new information that has come in between when we left off of trade and when we are coming back to trade. So, just to get you up to speed, just two things have happened, actually. One was a press statement, and it wasn't really a press conference, but a press statement by the chairman of the bank reiterating what the bank had said to exchanges a day before that, saying that, the board stands behind Chanda Kochhar. The only new bits of information that came in was a statement, a very generic statement that Chanda Kochhar had made all necessary disclosures, and then also an acceptance that she had not recused herself from dealings with the Videocon group. And we're not going to go back and remind you of what has happened. You've read about it over the weekend. The issue is that despite that press conference or press briefing by the chairman, and despite the fairly lengthy statement put out by the board, there are a few key questions that remain unanswered, and we'll continue to put them up on the screen for you. But I think, one question which you can argue that maybe Chanda Kochhar and the board is not liable to answer is the nature of the dealings between Deepak Kochhar and the Videocon group. We've, seen the details that have come out, at least in the report that Indian Express put out, plus, of course, what the whistleblower had done. There are questions as to why there was so much back and forth happening between these two shareholders. What was the reason for the valuation that was ascribed to the various share transfers? And maybe it's perfectly, explainable, but they should come out and explain it. So the nature of dealings between Deepak Kochhar and the Videocon group certainly is one thing that needs to be explained. You have a point to make there.
I do. Before you continue, and so I don't want to come back to this point, is that, look, on the face of it, Ida, based on what the Indian Express newspaper reported, and also what the whistleblower has pointed out in 2016 in his blog, and subsequently in his conversation with you as recently as 2 days ago, is the circuitous nature of transactions, Yeah. So I'm not suggesting that, any business that the spouse of any banker does, should be under this cloud of suspicion. It's just what looks fishy or raises eyebrows is that these two guys, Deepak Kochhar and Venugopal Dhoot, found a company. In 1 month, Venugopal Dhoot exits it. Then there is this series of purported transactions through which Dhoot's companies fund this new company. Yeah. Then they take control. Then they pass control back to Deepak Kochhar. It's just that, which is a little confounding, saying, why would you have to go through all of this? Unless you were trying to do something seriously complex. Yeah. Renewable energy doesn't require weird transactions of this nature. Yeah. So I don't get it. I'm not sure that, so that bit, is
yeah, and I think all the conversations that Venugopal Dhoot had with some other media groups, including the PTI, etc., he just seemed to come out and say that, look, any loans we got were entirely on whatever the strength of our balance sheet. It's tough to use that term for the Videocon balance sheet right now.
40,000 crores, for an oil and gas business. But anyway, that's a different story. But he did say that he ate lunch frequently with KV Kamath. And I was reading that report that PTI filed, and, my eyes fell out because I'm like, dude, you're just dragging more people into this mess, aren't you? He said, I know all the 12 people on the credit committee of ICICI Bank. That PTI story is on our side. I know all the 12 people on the credit committee, and I've often eaten lunch with KV Kamath. So yes. Not sure what point he was trying to make.
Yeah, anyway, so that's one story. I don't know who actually clarifies that, whether it's Deepak Kochhar, Videocon Group, Chanda Kochhar, or ICICI Bank. And then, of course, is the question whether Chanda actually disclosed each of these dealings to the board, or very specifically told the board or that particular credit committee that, look, there are dealings between my husband and Venugopal Dhoot. Now, the chairman said that she made all disclosures as necessarily with regulatory requirements, in keeping with regulatory requirements, but they did not specify. And if they had made, a written disclosure, they would have, I'm sure the board would have been happy to put it out there to clear her name relatively quickly. She did not recuse herself. We know that. Why did she not recuse herself? I think it's just, it would have just been best practice in governance. Not to say that somebody who has recused themselves does not have a bearing on transactions that are happening within their bank, especially if you're MD and CEO, but at least if you've recused yourself, it shows intent, best intent. So I don't know why she did not recuse herself, and I continue to point out that this is not just one credit committee meeting. It is a series of discussions and negotiations that have happened on the Videocon group for the last 3 years, which has been in trouble. So there have been talk of restructuring, refinancing, all of that, and finally, of course, it's gone to the NCLT, but in that that 3-year period, there were a number of negotiations. Why did she not recuse herself from that? And then finally, this one comes down to the board. Why did the board not conduct an external inquiry? And I think, one of the readers on our comments section pointed this out, and I'm just going to throw this out as a matter of best practice. But in 2002, when somebody had raised questions about PJ Naik's conduct at Axis Bank, he went on long leave immediately. The board conducted an external inquiry, came back only when he had been completely clear. Not to say that there's a comparison between the two situations, but there is a benchmark of best practice out there. So why is the board not following it?
Okay, I just want to ask you one more question. I know you had a long conversation with the whistleblower. This gentleman is the man who in 2016 actually did red flag some of these transactions. What was the most interesting point that you gleaned from that conversation?
I think it comes back to the dealings between Deepak Kochhar and the Videocon group. So you've already talked to some of those because, we've all said this. It's a jump of logic, and it is an assumption that the dealings between Deepak Kochhar and Videocon Group led to some sort of, easier loan terms or some sort of quid pro quo in the approval of an ICICI Bank loan to Videocon Group. That has to be an assumption because there is no paperwork to show that. But what makes that assumption palatable is the fact that these dealings are not entirely clear. They may have an explanation to them, but as of now, that explanation is not in public domain. Okay,
and just to provide the counterpoint and balance this out, ICICI has at every point in time said our loans to Videocon were part of a consortium facility that totaled almost 40,000 crores, of which ICICI Bank's exposure was less than 10%, about 3,500 crores or so. So that's their point of view on saying that, hey, we were not single-handedly giving them a loan, we were giving them a loan as part of a group. Now, let's move from that to NCLT. We promise to provide you every morning with what's going on in the National Company Law Tribunals with regards to, right now, the two most prominent insolvency cases. That is the Binani case that comes up in the Kolkata NCLT and the SR case that comes up in the Ahmedabad NCLT. Let's get to SR first. My colleague Vishwanath Nair is standing by with more on what to expect in the court today. Vishwanath.
Right, Meghana. So earlier last week, around Wednesday, when we were all still working, New Metal went ahead and filed a fresh motion at the Ahmedabad NCLT, where they are saying that the lender should not be allowed to open any of the fresh bids that will be submitted in the rebidding process for Jsw Steel till such point in time that the NCLT comes up with a decision on New Metal and ArcelorMittal's eligibility for the first bidding process. Remember that they have already filed a motion saying that they should be declared, New Metal should be declared eligible to bid for Jsw Steel in the form that they had originally submitted their resolution plan on the 12th of February. Similarly, ArcelorMittal filed a exactly similar plea in the matter, which is being heard by the NCLT, under that process. And on the 4th of April, the hearing on the eligibility will continue. But today, the NCLT will be hearing whether the lender should be stopped from continuing the resolution process, from opening any fresh bid that has been submitted to them. Remember that all 6 people who had submitted the expression of interest in December, they will be allowed to submit a fresh bid for Jsw Steel, and the deadline for that ends today. So if the NCLT decides in favor of New Metal in this matter, then the lenders will not be able to open this till the 4th of April at least, which is when the eligibility matter is going to be heard.
Okay, so basically from what I understand, Vishy, firstly, both argued that they were both eligible. And then secondly, I'm told by one of the lenders that now they've both argued that the other is not eligible, correct?
That's right. So, there have been statements that are being put out repeatedly by both parties, especially ArcelorMittal. They've repeatedly put out statements that they feel that in the form that they submitted their the resolution professional in the matter, Satish Kumar Gupta, he advised the lenders that both these bidders would be ineligible under Section 29A because Revant Ruya, who's part of the Ruya family, the promoter family for Jsw Steel, he has a shareholding, a minority shareholding albeit, in New Metal. While in ArcelorMittal's case, they were promoters of stretch companies. So that debate, whether this goes away or not, that debate is still on. But both the bidders feel that in the form that they had submitted on the 12th of February, their resolution plans, those were eligible, and that the RP is being unfair to them. On the side, the resolution is also in the new bidding process, in the fresh bidding process. What he has done is he's put in sort of a clause, and this was reported in the Economic Times earlier today. He has put in a clause wherein he's saying that neither of these bidders, neither of these 6 bidders, can enter into any kind of arrangement with the Ruya family, which promotes the SR group, in the future. So they can't sell or enter any kind of arrangement with them. If they do so, or if people come to know that there has been such an arrangement, then the resolution plan itself, even if it is approved by the COC, will be considered disqualified. So, that's another sort of roadblock in the way for at least New Metal, which has a clear link to Reliance and probably the others.
Not at all, but Vishy, I think this is exactly what 29A says. So I suppose the resolution professional is just articulating it loud and clear, saying that even a minority position might not be acceptable, or might not be something that the lenders are comfortable with at this point in time. And I think New Metal has told us, as well as other media, that they're willing to, in some sense, do away with the Ruya Association and acquire their stake in this New Metal joint venture, right?
Correct.
Okay.
That they have also written to the lenders, saying that they've offered to buy out the Reliance Ruya stake, and so that the other shareholders in New Metal can absorb that kind of equity that Reliance Ruya holds in the company currently.
All right, let's see what happens in the Ahmedabad NCLT today. So that's the Jsw Steel case. Meanwhile, a quick update on the Binani matter, which, as you know, right now is hotly contested between Ultratech and Binani Industries being one front, and the second one being Dalmia Bharat, which is the winning bidder in the resolution process. Now, there's nothing very new, I have to say, except for this one interesting twist, Ira. And I promised to bring you NCLT entertainment every morning. So the case is coming up today. The arguments are going to be the same. You can't have a parallel deal outside the resolution process, whereas, Ultratech and Binani will say, hey, look, but we have a better deal, so why don't lenders accept us? We had expected that the lenders might, in fact, hold an informal meeting over the long weekend, because before we went into the long weekend, the last hearing, the NCLT had said, we suggest that maybe the lenders could consider this new Binani Industries proposal, that was in cohort with Ultratech. But there is no written order to that effect. So there was no lenders meeting informally through the weekend because, broadly speaking, this is what at least one of the lenders told me, that they said we didn't know within what framework to act. So we were waiting for a written order, but that was not available or forthcoming. And so therefore, we did not hold a meeting at all. And we're hoping to actually ask the NCLT today, saying, look, if there is a framework within which you want us to consider this Binani Industries proposal, because this is outside the resolution process altogether, please let us know, and accordingly we'll proceed. So that's one view.
So it comes back to the fact that nobody wants to take the onus to jump into a meeting or a renegotiation outside the framework.
Correct. But the twist is this. So today we expect that Dalmia Bharat will argue that there was a winding up matter against Binani Industries in the Kolkata High Court. That had been admitted. Now, the claim was a very small claim by an advertising or marketing company. It was about a 6 crore claim on the basis of which a winding up matter had been admitted. The media report suggests that one media report says it was admitted. The other says it has been, sort of a winding up order was passed by the High Court. The people I spoke to at Binani say there was no order that was passed, but yes, it was admitted. And so Dalmia's argument has been that when there is a winding up case against a company, the person in charge of the company is the official liquidator. So on what basis is Binani Industries striking this agreement with Ultratech, and attempting to sort of scupper this resolution process when actually Binani Industries itself should be in the control of a liquidator? The counter argument to that is, and I'll keep it really short and simple, Binani Industries, a representative told me of, without wanting to be named, that we've already settled with the creditor who had filed the winding up claim, and it is an out-of-court settlement, and we intend to present those facts in an affidavit to the NCLT today to suggest that the winding up matter should not matter in these insolvency proceedings. So, I promised you, a new twist every day.
So, and this is not even one of the 12 large accounts.
No, this isn't even one of the 12 large accounts. Anyway, so we are back in the middle of April, though, and we should say that when it comes to the 12 large accounts, the deadline is fast running out.
Fast running out.
Okay, it promises to be an interesting day in the Kolkata NCLT as well.
All right, so that's the NCLT action. Now, remember, the insolvency stories are still going on, so there's no relief on that front. On top of that, all banks this quarter will have to deal with the RBI's new stressed asset framework. There are other side issues like the PNB fraud, plus some treasury losses that they may take, although that has been neutralized to a large extent. But Shraddha's here with us. We're looking at what the asset quality picture, Shraddha, is going to be like this quarter. And, you know, there were 2 quarters back, we were hoping that the pain had started to peak out. It hasn't. No, not by a long shot.
It hasn't happened, and it looks like it's not, or the wait for a better, asset quality has only gotten longer now. So, of course, the pain for Indian lenders is going to be a lot more severe in the 4th quarter, even as some of the banks will continue to report an organic growth in the NPAs and provisions as they continue to clean up their books, and then also adjust to RBI's stressed asset framework, the new one that was released in February. So just how bad can this NPA picture look in the 4th quarter of this financial year? Now, gross NPAs for Indian listed Indian lenders in the December quarter stood at 8.85 lakh crores as according to Bloomberg calculations, and according to early estimates by rating agencies like CRISIL and ICRA, that number could go up to anywhere between 9.25 to 9.5 lakh crores in the March ended quarter. Then there's also cases like Reliance Communications, for example, where the lenders had agreed to restructure the account because it had signed a sale agreement with Reliance Industries, but that hasn't gone through on account of the NCLT case. So those kind of accounts will add to the NPA pool in the 4th quarter. That will, of course, have a negative impact as far as the earnings of corporate lenders are concerned. So according to a Jeffries report, SBI, PNB, ICICI Bank, Axis Bank and Bank of Baroda will report loss before tax of anywhere between 2,800 crores to as much as 15,000 crores as far as SBI is concerned in the 4th quarter. These scary numbers are, of course, on the back of 4 assumptions that the analyst has made. And the 4 assumptions are, first, of course, that the 4th quarter operating profit will remain the same as that was the case in Q3. 80% of the stress loans will slip into NPLs. The generic slippage ratio they've assumed at 1%, and provision coverage ratio on all new NPAs they've assumed will be 50%. The sad part, what is worrisome, is that despite those kind of scary loss before tax numbers, it might not really be, or the March quarter may not really actually be the peak of these NPAs. Now, the gross NPAs in the Indian banking system stand at about close to 10%, and the stressed asset pool stands at about 16% of the total loans. Now, according to Credit Suisse estimates, another 2.6 lakh crores stand under RBI dispensation schemes, the various S4A, SDR schemes, and another 1.4 lakhs crores stands under is lying in the watch list. So all this total 4 lakh crores they expect will slip into NPAs, and then out of that additional bit they expect that 1 or 1.5 lakh crore will be referred to insolvency just in the next 2 quarters itself. So that is the kind of big change you will see in the NPA picture according to our estimates. And what is not a part of that watch list is some of the SME and Mudra loans which have been under stress. Bankers like Uday Kotak has already recently spoken about the fact that the next set of NPAs could actually come from that. So which actually means that the March quarter, or the bad news with respect to the asset quality, may not really peak out in the March quarter, despite the PNB fraud case and MTM hit on treasuries being taken care of.
So we go from 10% to how much?
16
over a period of
over
the next
a period
3
of
or 4
time. The gross NP number will, or most of them will slip into stress NPA, so will move closer to 16%, and that will happen a lot faster.
So I think it was always assumed that that would happen, but I think CS had assumed that it would happen over a 2-year period. But now with the RBI's new circular, etc., they think that will get expedited. So you will see probably over the next 4 quarters or so move towards 16. The only what could bring that total stress number down is when and if insolvency resolutions start to pick up in the second half of the year, maybe. But that we never know how that plays out.
Wow.
This is the additional 2%.
Someday you will stand up there and say this is the bottom of the NPA cycle and mean it, right?
Hopefully.
All right, great. Okay, final thing we want you to know about before you go into trade this Monday morning. The country's largest car maker and commercial vehicle manufacturer have nothing to complain about in the month gone by. Both Maruti Suzuki and Tata Motors have ended the financial year on a high note with monthly sales for the month of March posting double-digit growth. It's the same story for Royal Enfield as well. Yatin standing by with a breakup of the numbers that have already been reported and the numbers to come. It's a good month, Yatin. It has been at least March for these three companies.
Absolutely, and if you look at most of the numbers which have come so far have been more or less in line with street expectations. As you were mentioning, strong double-digit volume growth for most of them. So if you look at Maruti Suzuki, their total sales were higher by nearly 21% as far as the mini hatchback segment is concerned. The compact segment also contributed to the 14% growth. The total sales for Maruti came in at little over 1.6 lakh units, largely in line with the street expectations. Also, if you look at Tata Motors as well as Royal Enfield, these two companies also came out with the monthly numbers. Tata Motors total volumes, came in at close to 76,000 units. Their commercial vehicle sales were up 37% on a year-on-year basis. And look at the passenger vehicle segment also posting a strong 31% growth on the back of new launches and the kind of momentum that they are seeing as far as the utility vehicle segments are concerned. Eicher Motors also came out with strong numbers. Of course, it was in line with street expectations, coming in at a little over 76,000 units. The total growth was impressive at 27%. So that is the kind of growth number that we are looking at. Domestic sales also jumped by nearly 26% as far as Eicher Motors Royal Enfield business is concerned.
All right, and what about other automakers? We've got a bunch of numbers coming in today. What are you expecting? Can you run us through the numbers?
Well, if you look at the preview and the auto sales expectations, expect a very strong number from Ashok Leyland. We are expecting a 14% growth there. As far as Mahindra & Mahindra automotive segment is concerned, a single-digit growth number is what we are anticipating. But the tractor segment will, continue to grow at a pace of 15%, and that is the kind of momentum that we have seen for the past months as well, as far as M&M tractor business is concerned. For the two-wheeler majors, we have the likes of Bajaj Auto, TVS Motors, Hero MotoCorp, and on a low base, they would be growing quite strongly. In fact, Bajaj Auto, we are expecting a very smart recovery as far as their domestic business is concerned on the back of new launches, and also the export markets are expected to do well on the back of better three-wheeler sales as well as motorcycle sales. TVS Motors also, they have launched a new scooter, and probably that will be aiding the overall volume picture as far as all of these automakers are concerned.
Hey, Yatin, one quick follow-up question. Would you say the standout in all of these numbers is the aggression we've seen in commercial vehicle sales? It's one. And B, Maruti Suzuki's continuing outperformance in the UV category, which doesn't spell very good news for Mahindra.
That is one of the factors for Maruti's growth. But if you look at Maruti's three models, one is the Dzire, second is Brezza, and third is Baleno. These three models have long waiting periods, on an average 3 to 4 months of waiting period. In fact, what I hear from dealers checks is that there is a 6-month waiting for select Dzire models. So the kind of new launch impact that Maruti has, and the order book that Maruti is sitting on, 1.5 lakh, 1.6 lakh is the kind of run rate most of the analysts are working with. So on the back of that waiting period, Maruti is always expected to show strong numbers. But what's surprising and what's positively surprising rather is the commercial vehicle sales, because be it Tata Motors, Ashok Leyland, we have various vendors of the companies talking about shortages of spare parts and the kind of materials that commercial vehicles players are demanding. The on-ground discounting is also coming down. So the commercial vehicle demand really on the ground remains quite strong. In fact, the light and commercial vehicle segment is also showing some 25-30% kind of a growth on a monthly basis. So every segment of the commercial vehicle segment is doing well so far as all of the listed players are concerned.
And that bodes well for the economy. Yeah. Okay, we're going to wrap it up here.
Yeah, we've got lots more coming up on the show, though. So we will talk about the outlook for markets in FY19, macro cues as well with Dhananjay of Emkay Global. We'll discuss Biocon's plans to grow in the biosimilar space with CMD Kiran Mazumdar-Shaw, and we discuss the NPA menace with the Santhana Krishnan of PKF. That's coming up in the second half of the show.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
RP Sanjeev Goenka Group. Growing legacies.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're watching Indian Open. I'm Darshan Mehta. Joining me is Navneet Saluja. Let's see how the Asian markets are panning out at this point of time. It seems like a decent queue. The Nikkei is up almost 0.5%. The Chinese markets are up almost close to 0.5%. And the SGX Nifty is indicating a downtick of 19 points. But remember, on Thursday and Friday combined, we were up almost more than 125 points. So probably a gap up opening of 100 points can be anticipated when we open for trade today. But it's interesting to see how the new series will pan out, what that has thrown up. Agam is joining us. Agam, what's the range that the new series is throwing up now?
Sure, Darshan, it's going to be a 200-point range, at least as far the open interest, maximum open interest. But let me start off with what's transpired over the series. And as you can see, in terms of rollovers for the Nifty, that stands at around 69%, largely in line with the previous 3-month average. But it's not the same for the Nifty Bank futures, which has seen rollovers of around 75%, slightly higher than the previous 3-month average. Along with that, what we've also seen is just a little bit of an uptick with respect to the India Volatility Index, standing at around 15.8. But the Nifty put call ratio, as one might expect, has changed quite a bit. In fact, looking at a drop at around 1 in comparison to 1.15. Now, what are the changes in terms of open interest in options last Wednesday? That was when we saw expiry. Well, we saw a lot of traction in the 10,200 strike. That is where we saw, a lot more writing in the 10,200 call and unwinding in the 10,200 put. But, as I was mentioning, where does the open interest stack up? And the maximum open interest for now stands in the 10,000 put and the 10,200 call, and that's the 200-point range that we are looking at. But in terms of stocks, we're keeping an eye on Coal India, which saw fresh longs coming in. We also saw fresh longs in other counters such as Hero MotoCorp. We're awaiting earnings, or rather, pardon me, your March volumes coming in for Hero MotoCorp. So we saw longs there as well. And we also saw shorts in something like Cummins India. So we'll be seeing some amount of weakness seeping in. That said, once again, all eyes will remain on the Nifty, considering the fact that we saw the SGX Nifty advance over Thursday and Friday. Let's see where that takes the Nifty going to today's job trade.
Thanks a lot, Agam, for bringing those cues from the futures and options market. It's an important day, Darshan. I was just looking at the FI data. It's day one of the April series as well. In the last two series, if you saw, FI started the series while being net long on index futures. And remember, February was 55%, January was 80%. We'll just pull up those graphics. We've started the series where FIs are net long on index future of only 18%. And that's the lowest figure, at least, I've seen in the recent past. Remember, there was some buying which was seen from the FIs recently in the cash segment. So, but that buying could be because of the year-end phenomena. They were clearly hedging their cash portfolios on the futures and options side. At least that's what the start of the series data is indicating. Even if you look at the options data, they've been short buyers for the last two series. They have been on the right side of the trade for sure. So even if you look at the options, they've bought more of puts for the April series, at least as of now, as things stand. And on the writing side, as of now, the percentage still is a little bit higher on the put side. It's the start of the new financial year. Let's see how the things pan out.
Yeah, and I think the big point will be ICICI Bank, you know.
Truly.
Because, you know, we just discussed it, unanswered question. It's a sizable chunk on the Nifty.
I think it's got nearly 5%.
Yes, on the Nifty, and it's a double digit on the Nifty Bank. Yeah, so Nifty Bank, and then, you know, obviously the PSU mess continues. So now if private sector banks are coming out, and then, you know, and that there are problems there, you know, that will be, so we'll watch out for the Nifty Bank. And if the Nifty Bank goes, probably there will be significant amount of pressure on the Nifty also.
That's right. In fact, the important thing now will be when most of the market participants, after the debacle that happened with the PSU banking space, with PNB now actually coming out and saying they will take care of all the LOUs. If there is any shift in the portfolios within the private banking space from ICICI Bank, from the likes of IndusInd and HDFC, that'll be quite interesting to see.
Yeah, so that will be, you know, because banks like Kotak, HDFC Bank, you know, multiple guests who have come in, they've always recommended that, you know, if you want to stick to the banking, stick to the HDFC Bank, stick to the Kotak, stick to the IndusInd Bank.
But we've not seen any downgrades as of now, right, for ICICI?
I think everyone's waiting. I think there are three notes. One was the Macquarie note, there was an IDFC note, and there was a Goldman Sachs note. And all of them are saying that, you know, the bank needs to come out and clarify on the, because the bank gave a general statement. They didn't take any questions. So they all say that, you know, these are the unanswered questions. You need to answer them. So I don't think there is any downgrade, but these,
wait and watch.
It's a big concern anyway.
Sure. So we'll be watching out definitely for the entire banking space, and obviously, Darshan, we'll go across to our research team to find out which are the stocks.
Yeah, we will. So there are a lot of stocks that we need to watch out for, at least in the banking space, in the cement space. A lot of brokerage notes coming out, a big upgrade that came in on Cummins. What are brokerages saying on ICICI Bank? So Shraddha's spoken about that. So let's start with the research huddle. Nikki, Shraddha and Yatin join us. Nikki, let's start with you. What are the important stocks to watch?
The first one that we're tracking is the order win by Punjab by an EPC order worth 806 crore in the state of Odisha has been awarded by NHAI. Next in the list, we have Healthcare Global Enterprise, where Manish Pobrai Investment Fund acquires an additional 0.1% stake in the company. Also in the list is Jsw Steel, which is planning to acquire 100% shares in Acro Junction Holdings. This is a Delaware-based corporation that produces hot rolled coil, and the enterprise value is around $180.35 million. Tata Steel has reported its annual sales and production numbers. Sales is up by as much as 11% in this fiscal. This is lower than the 15% growth that we've seen in the previous year. Also, Coal India has reported production as well as offtake numbers. For production, again, it's a miss in target by at least 5%, both production as well as sales. Tata Power is expected to has reported that it's going to be selling off its defense business to Tata Sons unit at an enterprise value of 2,230 odd crore, which is expected to bring down its debt by 10%. Dalmia Bharat, again, there is an NCLT action there. It's readying up a legal action as Binani Cement acquisition war heats up. This is a mint inclusive.
Okay, so we'll watch out for all those stocks, but Shraddha, the other stocks that you need to watch out for?
Darshan, of course, ICICI Bank, where apart from the Chanda Kochar issue, there's also a penalty of 59 crores that has been imposed on the bank by the RBI, and that is more to do with the non-compliance with respect to rules on the direct sale of bonds from their HTM portfolio, and that is for the March 2017 ended quarter. You have Reliance Capital, which has sold 14.9% stake in KGS Developers for 82 crores and another 19% in Sula Vinyas for 256 crores, some asset monetization there. IDBI Bank has entered into a sale deed to sell its BKC property to SEBI, and according to Times of India, that is for a transaction value of 900 crores. Ashiana Housing and IFC have inked a pact to co-invest into affordable housing project for 375 crores. Tata Power Canada Bank has called off its divestment plans in Canfin Homes on account of lower than expected valuations. It's actually positive for Canfin Homes because it was trading at a market cap of over 7,200 crores, whereas according to media reports, the valuations that were offered were to the tune of $1 billion or 6,500 crores. And finally, Quality, where they've clarified that a certain brokers fraudulently offloaded shares in the market and is absconding. And this was on the back of course, the kind of the way the shares have been battered in the last week.
Okay, and what about the brokerage reports that have come on ICICI Bank?
So, starting off with Macquarie, they've said they will be watchful of the developments of the Biocon case, but given that ICICI trades at just one time its FY20 core price to book value, they expect that the bank is unlikely to require any fresh capital despite haircuts and IFRS implementation. So they see a low dilution risk, mainly because of its ability to monetize subsidiaries at good valuation. So they've maintained an outperform and a target price of 425. IDFC Securities has also spoken about ICICI Bank's business trading below book value as far as the FY20 expected numbers are concerned. So they have also maintained an outperform with a target price of 390, though they have said that they see pressure in the short term on the stock following the RBI fine allegations and CBS preliminary inquiry. Goldman Sachs, as they have said that they believe the latest step by the management to address concerns in a press release will go a long way in reassuring investors about lending practices, and they also see greater corporate engagement as a positive. So again, a maintained buy with a target price of 410. And lastly, Bernstein, which has said that probe worries would escalate with CBI involvement, and they are advising caution. They believe that the stock in the coming week will be weighed down by these developments and that it deserves a lower multiple than some of the private banking peers like HDFC Bank. But again, no change in their rating. They had underperformed. They have maintained that in a target price of 220. So to sum it up, given the not so pricey valuations, most of the brokerages have not changed either their rating or the target price, but they have advised caution, and they expect the stock to react negatively, at least in the near term.
Okay, so that's the view on ICICI and important brokerage upgrades coming in. What are the notes? Especially, I believe there's one on Cummins and one on Tata Motors.
Well, if you look at Tata Motors, clearly it is one of those frontline stocks wherein we have seen some bit of selling pressure, but most of the brokerages have been positive as far as the stock of Tata Motors is concerned. Today we have a brokerage talking about the kind of upgrades that are coming in on Tata Motors. Now, if you look at HSBC, they are seeing a 44% upside on the stock of Tata Motors with a target price of 480. They expect that the US market volumes for Jaguar Land Rover should be good in 2018. Of course, on the back of the new launches that we are seeing as far as Tata Motors is concerned. Of course, China is, some lever for Tata Motors as far as the sales volume are concerned. But Europe, if you look at the auto body and the brokerages, they're expecting some bit of slowness coming in for that particular company. But as far as Cummins is concerned, they are talking about some positive order flows that would be, aiding the overall company. They have Credit Suisse has upgraded the stock to outperform from a neutral rating. They have hiked the target price by 100 rupees to a level of 975 from the previous target price of 875. And of course, they are expecting that moving forward, the kind of underperformance that we are seeing in the sector should pick up moving forward. And also, if you look at the expenses that have been rising and impacting the profitability should normalize moving forward. So these are two important brokerage calls for the day.
Okay, so we'll watch out for all these stocks in trade, but it's an important day today because there are some changes that have happened on the Nifty. So 3 companies go out of the Nifty and 3 come in. So Navneet, let's see which are the important companies that have come in and and gone out, and how has their performance been, whether it's already been factored in or no. So as far as the inclusions are concerned, Bajaj Finserv joins Bajaj Finance. Grasim comes back, and it was taken out because of the deal with AB Nuvo. And for the first time ever, Titan comes into the Nifty.
I think it's the first time a jewelry company will be entering among
So I think, for the first time, I think, and again, the consumer discretionary, consumer space again gets more weightage because of the inclusion of Titan. And what goes out, so after ACC, Ambuja goes out, Aurobindo Pharma was there for a brief time, it's gone out, and Bosch has gone out after a brief time. Now, interestingly, in the last, from the time, this is the weightage that will actually happen, and this is according to Edelweiss. So Grasim will have a weight of 1%, Bajaj Finserv 0.75 and 0.85 on Titan. Now, interestingly, if you're looking at what the price movement since the inclusion that has happened, Bajaj Finserv has moved up 4%, Titan has moved up 15%, and Grasim has moved down almost 5%. But interestingly, all the 3 companies which have gone out, Ambuja, Aurobindo and Bosch, all of them are down almost anywhere between 2% to 11%. But interesting to say, you know, the earlier inclusions, whatever it is, we've always, this is the Nifty 50 inclusion. So Bajaj Finserv goes out because it's come into the Nifty. So GlaxoSmithKline Consumer and Glenmark also go out, and Titan goes out because it's moved into the Nifty. Tata Power and Torrent Pharma are the other companies that go out, and what comes in is AB Capital, Ambuja, Aurobindo, Bosch. So these are the companies that come out because of the exclusion, and financials get much more weighted: GICRE, L&T Financial Services and SBI Life. So this has come out. But interestingly, Navneet, if you see what has happened, every time that the Nifty, and history has shown it, that the Nifty company which comes out of the Nifty always tends to outperform rather than the company that comes into the Nifty, and usually that's the case that we've seen.
That's interesting. You know what, then I'll be watching out for Titan for sure, Darshan, because the markets have been so weak in the recent past, but this is one stock which did not succumb to any sort of selling pressure. It's been trading around its life high levels, almost around, it did touch its lifetime high levels yesterday, and one stock I think for which everything's been going right. Demonetization went into their favor when the market share shifted from unorganized to organized, and with the recent PNB fiasco where the market share now from the organized players has been shifting. So I think these are the couple of factors, and I think the numbers this time around will reflect, because last few earnings of Titan has been quite strong.
Yeah, so Titan has been one. So I think everything that had to go right has gone right for Titan. So but interestingly, some of the companies, when they come into the Nifty, that pressure always come out. Just look at Vedanta, you know, when it came out of the Nifty, it managed to outperform significantly.
Vedanta had a phenomenal run up
post the Nifty, and there have been a lot of cases. And look at the companies that are in the Nifty. So Aurobindo, Bosch is at a 52-week low. Aurobindo's never performed the time it was in the Nifty. Ambuja has been there for a long time, and it's finally come in. And look at the performance of some of the oil marketing companies. Now all the three oil marketing companies are there in the Nifty, but they have not managed to perform. So ever since IOC actually came into the Nifty, it's been underperforming. So it'll be interesting to see. In fact, I'll watch out for the exclusions much more, because generally history shows that once you're out of the Nifty, you tend to outperform.
That's an interesting fact actually which Darshan has been highlighting. So we'll watch out whether the Nifty exclusions tend to outperform in the near term. But as of now, let's get you some technical check going on the markets, whether we can sustain the 200-day moving average of 10,180 or not, because SGX Nifty is suggesting a gap up opening. We're joined by Ruchit Jain, technical analyst at Angel Broking. Hi Ruchit, good morning to you, and thanks a lot for joining us today on Bloomberg Quinn. What are the levels that you'll be watching out on Nifty, and also tell us, would you take any sort of trade when the market opens today?
Yeah, hi, very good morning, Navneet. Navneet, during last week, if we see, in fact, last couple of weeks, 10,230 was acting as a very strong resistance on any pullback moves. Yes, it was an expiry week, and we even talked about how 10,000 put was not shedding its open interest in spite of market going below 10,000 mark for one or two trading sessions. So 10,000, 10,050, I believe that in near term now should act as a very strong support. And on the high side, after post a gap up opening today, 10,230 would be very crucial, as since last 7-8 trading sessions, market has not, the Nifty has not able to cross the 10,230 mark. In case we see a 10,000 breakout about 10,230, then I think this pullback move should get extended towards 10,350 kind of thing. So post a gap up opening, I would watch for a breakout about 10,230, and if 10,230 is crossed in Nifty, then definitely for intraday or 1 or 2 days perspective, one should create long positions for targets around 10,350.
Okay, Ruchit, Meghana Malkan also joins us on the show. Good morning, Meghana. What are the levels that you are watching on the Nifty? What should one watch out? Whether what are the important support and resistance levels that you are looking at?
Yeah, morning Neeraj. Yes, as we've been watching the actions from the past 2 weeks, 10,000 level has indeed become a very strong support, and you see the candlestick patterns forming on the weekly chart at that level. We've had a tweezer bottom forming up, which is a very good reversal signal should it sustain. So I would really, what I would watch out for ideally is the top to be crossed, just like how Ruchit mentioned, 10,240 around that level. So that will confirm the bottom formation. Nevertheless, I think it's a very good opportunity to buy on the downside, because there are multiple supports running through. RSI is taking support at 40 level, which is a very good sign. We have the candlestick formation in place. So I think things are in place for the bottom to be made at this level. So 10,100 is something that I would watch out for a very low risk trade at this level.
And Meghana, what are the important strategies that you're recommending for today?
Well, on the banking sector, I like Bank of India. The stock has been giving 3-period divergence on the weekly chart, which is supposed to be a very good short-term buying signal. And monthly also, the stock is at a very good momentum support. So Bank of India is a good buying strategy for this week with a stop of 100 on the lower side and target of 112, the initial target. And second one that I like is LIC Housing Finance. I know with all the news and all, but the way the stock is giving a low risk idea for this week, there are multiple supports running through at this level. So LIC Housing is another buying strategy for this week, the stop of 520 for a target of 560.
Okay, so those are the strategies coming in from Meghana. But Ruchit, what about you? You got 2 buy calls for the day?
Yes, I have a couple of buy recommendations. One is a buy in UPL. If we observe the weekly charts, then since January 2017, I mean last 14-15 months, whenever prices have came near the 680-790 range, 680 to 700 range, that has acted as very strong support. You take in the month of Jain 2017, then a corrective move in the month of March 2017, then December 2017, and again in February 2018. So all this, at least 4 to 5 times this 680-700 range has acted as a very crucial support for UPL. So now the prices have already corrected since last 1.5-2 months, and this lower end is again a good range to watch out for. As of now, for very short-term trading perspective, 712 should be a stop loss, and for targets around 761 can create long positions. My second pick would be a buy call in Apollo Tyres. We can clearly see the outperformance from the tire space in this stock. In spite of the market correcting in last 2-3 weeks, we have not seen any kind of price correction in Apollo Tyres. In fact, when again on a pullback move in last 1 or 2 trading sessions, the prices have moved higher and has given a breakout with very good volumes. So when the prices are going up, volumes are good, and on corrections, the volumes are quite less. So this is a positive sign. I think this outperformance should continue going ahead. One can create long positions in Apollo Tyres at current levels also, with stop loss below 266 for short-term target around 295.
Okay, so that's the strategy. So Meghana has recommended Bank of India, buying it. LIC Housing Finance is also a buy. And Ruchit talks about a buy on UPL and Apollo Tyres. So just hold on. We are moving on to a special segment now, which is called Bloomberg Edge, where Jayesh Khilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Jayesh, which...
I think we'll get Jayesh back in a while and get to know what the Bloomberg terminal is throwing about for today's session. But Ruchit, just want to take your view on ICICI Bank. And you know what, that's the stock which is going to be in focus. Darshan and I were discussing. It's got almost 5% weightage on Nifty, 16-17% weightage on the Bank Nifty. It's already underperformed now if you look at it on YTD basis. If do you think there is merit in going short on ICICI Bank at current levels? If yes, what sort of levels on the downside that you'll be watching out on this stock?
Yes, Navneet, you rightly pointed out that this stock has shown a decent underperformance in last 1.5-2 months when the index has shown a corrective move, specifically the Bank Nifty index. This has been one of the leader in taking the indexes down. So I think if one has to go short, one should wait for a pullback move. The 200 DMA, which was earlier a support, now could act as a resistance, and that is placed around 300-310 kind of range. So one should wait for a pullback before creating any kind of short levels around 300-305 range. One can go short, and on the lower side we could see the stock testing around 260 maybe in next 1 to 2 months.
Okay, so that's the view on ICICI Bank. I think Jayesh is now ready to talk about a stock in which the Bloomberg terminal is throwing up a buy signal. So Jayesh, which is the stock and what's it indicating?
Morning, Darshan. So I'm watching out for Chennai Petroleum. That is because the stock has actually bounced from its 52-week low, and the target price suggests a 50% upside or a near 50% upside for the stock. What is interesting is that the stochastic indicator has also suggested a buy signal on the stock. So that's the 1-year chart, and what I was referring to is the bounce back from the 52-week low levels. Also, let's have a look at what the stochastic indicator actually does. It helps you to identify the trading range and also when the price is actually overextended on a particular stock. It measures where the current price is in context to the recent high or the low that the stock would have clocked for itself. Some conditions that you have to watch out for. While the overbought line is at above 80, the oversold line stands below 20, and there are 2 lines which get plotted, and a crossover between them gives you a buy and a sell signal depending on the direction of the crossover. Let's have a look at the chart of Chennai Petroleum. That's the 1-year chart you can see, and Day before, or a couple of days back, it had actually touched its 52-week low. After that, it has actually bounced back. The bottom panel shows you the stochastic indicator, and you can see that if we zoom into it, the blue line has actually crossed above the white line, and both of them are above the key oversold line, which is standing at 20. So, gives it a potential buy signal on the stochastic indicator.
Okay, Jayesh, thanks. We'll watch out for Chennai Petrol in trade today. Meghana, any view on Chennai Petrol? The Bloomberg terminal is throwing up a buy recommendation on that one. Is there something that you can spot?
Yes, in fact, something very interesting in this stock that I just noticed is monthly, if you see the monthly chart, it's at a good support on 20-period moving average. It's come on this support after hitting, after tagging the upper band of the Bollinger Band. So when the stock does that, when it takes support the first time on the center band, that indeed is a good signal. So what ideally one should do is wait for a bullish candle pattern this week. Because momentum also on the monthly chart is at a good support. So a bullish candle pattern this week would really confirm the buy signal coming forward. So I would ideally like to wait for that.
Okay, Chennai Petroleum has reached its support level. That's what Meghana is suggesting, and also the Bloomberg terminal is throwing a buy signal on that. Remember, on YTD basis, the stock has seen correction of nearly 23 to 24%. But let's move on and talk about the Indian gas producers who are likely to earn more for every unit they sell now, at least for the next 6 months. The government has hiked administered gas prices for the first half of the year. For the first half of at least the new financial year, taking it above $3 per unit. For the first time in 18 months, this has happened. And Somit Sarkar is here to tell us which are the companies that stand to gain the most from this price hike. Somit, take us through it.
So the gas prices have been set at $3.06 per MMBTU, that is million British thermal unit. That is a hike of around 6% compared to the last year. Now, if you see, the government had last raised gas prices in November 2014 when they had introduced this new pricing formula. But since then, they had reduced the gas prices continuously, making the gas business a loss-making business for the upstream companies. But however, this is the second consecutive hike that has come in, and this new rate will be applicable from April to September 2018, that is for the first half of financial year 2019. Now, along with this, the government has also hiked the rates for difficult fields or the deep water fields by around 8% to $6.78 MMBTU. Now, this revision in gas prices, along with the government's focus to increase the gas output, to double the gas output, will benefit these upstream companies. Now, among these upstream companies, ONGC and Oil India will benefit the most. As you can see, they produce nearly 80% of the total gas production in India. ONGC produces around 72% of the total gas produced in India, while Oil India does around close to 9%, while the remaining 19% is done by other private players.
And Somit, is there any way of calculating how much gas producers tend to gain because of this hike?
So if you see, the gas business contributes nearly 16 to 18% to ONGC's top line, while in the EBITDA front it contributes around 14 to 18%. And when it comes to Oil India, to the top line they get around 15 to 17%, and on the EBITDA front 14 to 17%. So we have tried to see by how much percentage their EPS would have been higher if this new raise, that is 3.06 per MMBTU, would have been applicable in the corresponding period last year, that is for the first half of financial year 2018. So we have assumed that the sales and production number remain the same. As production remains the same, the total cost of production would have also been unchanged. We have also assumed that the company pays taxes at the same rate. And lastly, we have assumed that the rupee to dollar conversion would be around 65. So at $3.06 per million British thermal unit, the company would have earned a gas revenue of close to, ONGC would have earned a gas revenue of close to 6,900 crore rupees, while Oil India close to 881 crore rupees. Now, this would have translated into an incremental profit before tax of close to 1,300 crore rupees for ONGC, and for Oil India close to 167 crore rupees. And this, after deducting the taxes, the incremental profit or the after tax or net profit would have been close to 890 crore rupees for ONGC, and for Oil India close to 118 crore rupees, which means that this would have added close to 0.7 rupees to ONGC's EPS and 1.56 rupees to Oil India's EPS, which means that EPS would have been higher by 10% for ONGC and 11% for Oil India for the first half of financial year 2018 if the gas prices would have been around $3.06 per MMBTU.
Okay, so this move will be EPS accretive, as Soumit is highlighting. Thanks a lot, Soumit, for bringing in all those details. We'll watch out how the stocks, at least of ONGC and Oil India, open in today's trading session. But quickly, let's get in Lancelot, Cunha, Chief Investment Officer at ValueX, who joins us on the show now. Hi, Lancelot. Good morning, and thanks a lot for joining us. We were talking about the gas price hike. What's the view there? We've already seen these upstream companies like ONGC, Oil India doing well because even the Brent crude prices breached the mark of $70. If you're tracking this space, what are you more bullish on, the upstream or the oil marketing companies?
Well, I would still be a little bit more, bullish on the distribution companies, because the gas distribution companies like you have Mahanagar Gas, which are distributing the gas, I think they would also stand to benefit significantly because their margins would also go up since the retail prices have also been hiked to cover that. So, given their business model where they are not so much dependent on the international prices, but they have a steady market growth as well as the volumes and the revenues go up. So I think those would be more interesting plays rather than the oil manufacturing companies, which is like ONGC and Oil India. So I would look at that as an opportunity as opposed to ONGC.
Lancelot, what about ICICI Bank? Is that something that you would accumulate at this level, or because of what's panning out in the news recently, that would be an avoid for you?
Well, I wouldn't put it as an avoid because, the valuations are fairly attractive. However, ICICI Bank has a considerable proportion of its loans in the corporate lending side, and that could see some more pressure as far as the NPAs are concerned. I also think that it will be difficult for ICICI to increase its lending unless to take care of these NPAs.
Lancelot, just hold your thought there. We'll come back to you. We're getting the pre-opening rates there on the screen. Nifty's showing a downtick of actually right now, but remember these rates will just settle down. These are just the pre-opening rates. By 9:08 we'll see a clear indicator. But ICICI Bank, remember, that's the stock which is going to be in focus. Two reasons behind it. One is the RBI fine of nearly 59 crore and the other ongoing investigation of giving out the loan to Biocon Group. So 10% lower for ICICI Bank. Let's just pull up stocks like Canfin Homes and Canara Bank. That too will be in focus on back of that divestment being called off. Canara Bank was looking to divest nearly 30% stake, so that's also showing some bit of downtick, at least in the pre-opening rates as we speak. And whole host of other stocks. Pull up PNB. I guess that too will be in focus as the bank has confirmed now to the stock exchanges that they will be adhering to and rather clearing all the LOUs that they issued to the Nirav Modi group.
Yeah, that's about it. Canfin Home, it's very interesting because the news came out over the weekend, but the count is down almost over 10. This is not excluding this, the count is down almost 10% till Wednesday's close ahead of the announcement. So there was some bit of sense that was happening. The other counter I want to watch about is Maruti, whether the strong sales numbers will help it rebound. It's up 1.5%. Also pull out Tata Motors and Eicher because they also have reported their monthly sales numbers. So Tata Motors is moved up 2.5%, rightly so, on strong numbers. And Eicher is up over 1% in trade. As far as, let's pull up Coal India, the production unit, Coal India, let's pull up that is trading rather flat in trade. Punj Lloyd has gotten an order of 806 crores, so it'll be interesting to see. And let's pull up Healthcare Global, in which Munish Pabrai has up stake in the company. Also important to see Fortis. Fortis was a big drag that happened on Wednesday. Fortis has managed to inch up today despite the news that Daiichi Sankyo has moved, the court has moved SEBI to block the sale to Manipal. So Fortis has managed to inch up in trade. So that's what I'm seeing. Credit Suisse has upgraded Cummins, and so interesting to see how Cummins has reacted. And two initiating reports. S Chand was initiated. So S Chand will be interesting to see how S Chand has moved up in trade. It's up 1.3% on a brokerage initiative, and Bofa ML has initiated on Dilip Buildcon. So it'll be interesting to see how that one is reacting.
So whole host of stocks, I guess, to keep an eye on today. Markets, these rates will settle down, and as of now in the pre-opening rates, we're seeing Vedanta, which has jumped in trade. Vedanta showing an uptick of 5%. Ultratech, Tata Motors, as Darshan was highlighting, there's an upgrade which is coming from HSBC. So that too will be in focus. So we'll wait for the final rates to kick in by 9:15. But moving on, we've got a listing today, a new kid on the block. Auto ancillary company Santhana Technologies will list on the bourses after raising close to 512 crore rupees through its IPO. Somit joins us once again with the possible valuations on this listing there. Somit, take it away.
So the company had raised close to 512 crore rupees at an issue price of 332, and the total issue was subscribed nearly 6.2 times, with most of the demand coming in from the QIB portion. Now the QIB portion was subscribed nearly 14.5 times, while the HNI portion was subscribed nearly 6 times. The retail portion received a subscription of close to 1.4 times. Now the street is expecting a premium of close to 15 rupees per share, but given the current market scenario, let's see how the valuations would stack up if the shares list at a premium and if the shares list at a discount. So at the issue price, the market capitalization would be close to 2,000 crore rupees, price to earnings would be 29.2, market cap to sales would be 1, and EV to EBITDA would be 10.6. Now, if it lists at a premium, then the market capitalization would be close to 2,100 crore rupees at a share price of 350. Price to earnings would be 30.8. Market cap to sales would be 1.1, and EV to EBITDA would be 11.1. Now, if it lists at a discount, and if the share price is close to 320, then the market capitalization would be close to 1,900 crore rupees. Price to earnings would be 28.1. Market cap to sales would be 1, and EV to EBITDA would be 10.3.
Somit, what about the business financials? Company's business, tell us more about it, and how are the financials panning out?
So Sandhar Tech is an auto ancillary company which is largely focused in manufacturing locking system and rear view mirror vehicle parts. Now if you see, the company has nearly 31 manufacturing facilities across 8 states in India. It also has 2 facilities in Spain, 1 in Mexico, and the company is in process of setting up 5 more facilities in India. Now the top 5 clients of the company contribute nearly 70% to the top line, and its top 5 clients include Hero, TVS, Honda, Bosch and Royal Enfield. And if you see product wise, the company generates most of its revenue by manufacturing products like locks, mirror assembly and wheel assembly. It gets around 23% of its top line from locks, 12% from mirror and 14% from wheel assembly. And if you see financially, compared to Minda Corp and FIM Industries, the company's growth rate were a bit muted. The company's revenue, net profit and EBITDA grew at a compounded annual growth rate of 9%, 6% and 8% over FY14 to FY17. On the balance sheet side, the company's book value per share was close to 104 rupees, and its total debt to equity was the lowest at 0.4 times. As you can see here, the total debt to equity was lowest at 0.4 times. Lastly, on the return ratio side, the return ratios of the company are a bit muted. On an annualized basis for FY18, the return on equity was 10%, return on capital employed was 16%, and return on asset was close to 4.5%.
Okay, many thanks for that, Somit. Lancelot, you were, before the pre-open, you were talking about ICICI Bank. It's down almost 3% now. So I'll let you complete that, and also a view on Maruti. The numbers have come out pretty strong. The stock is doing well. So your view on ICICI Bank and Maruti.
Yeah, I think as far as ICICI Bank is concerned, valuations have come off, and they are looking attractive. So one can look at that stock at these levels. However, one should be prepared that there may be a bit more pain in the NPAs on the NPA front, because ICICI Bank predominantly has a large corporate book, and that could see some more pain going forward. So that's something which one has to watch out for. So there could be a downside risk. But I think from this levels, it looks relatively attractive, and then you can, probably look at buying into the stock at this point in time. As far as Maruti is concerned, I think the good numbers that we've seen, indicate that the automobiles growth is going to continue, and Maruti is definitely the market leader and will continue to grow. So I think even at this high valuation, it does seem that if one is looking at buying into growth companies, then Maruti would definitely be one of the stocks on the list.
Okay, so far good numbers from Maruti, Tata Motors as well as Eicher Motors, double-digit growth coming in for the month of March. And as of now, I guess the top gainer in the pre-opening rates, Ultratech is showing an uptick of 4%. So watch out for that counter when the market opens. But as of now, Dhananjay Sinha, Head of Research, Economist and Strategist at Emkay Global joins us on the show now. Hi Dhananjay, good morning to you, and appreciate you joining us today on this first at least working day of this new financial year. I want to start off, what's the key theme that you will be tracking for FY19?
So
So I think FY19 will be a sort of a volatile year for the market. I think key thing that is a takeaway from our analysis last year is what happens to domestic flow, especially the mutual funds and retail participation. And we have seen that wherever there is an overweight position of the mutual fund or the retail investors, there has been sharper correction in the stock price and the relevant index. So I think that is something that we'll need to watch through the year. So I think that is one superimposing thing that will be there. The other thing is, of course, what happens to the risk-free rate globally. What is happening? We'll have to see how does that filter into our markets, and that will have a repercussion on the valuations. And I think the third thing that will be relevant is what happens to another global factor, which is protectionism, and how does that pan out, and how does the market take that on, and that is a very important thing going forward. So these three things that will be there. On the fourth side, from a domestic front, I think we believe that it's an election year, so all the election-related sectors significantly to do with consumption, rural and agri sector will stand to gain. So that's the fourth thing. I think there is a fifth thing, I would say. From a global trade standpoint, there is some cyclical upturn. We'll have to see whether that can stand strong in the context of rising protectionism. So these are the four things that will be there. So I think a lot of domestic sectors, domestic inward-oriented sectors will actually do well. I think the government will also sort of have favorable policies which are more focused towards domestic plays.
Okay, Bajaj auto sales number for the month of March are out. So they've come in at 3.34 lakh units versus 2.72 lakh units. But remember, the estimates was much higher. The street was anticipating 3.55 lakh units. So it's come in slightly lower than what we were anticipating. So Bajaj Auto nevertheless has started with a positive bias. Dhananjay, any view on the auto sales numbers that have come out? Maruti, Tata Motors, Eicher, and now Bajaj Auto. Any view on how the auto sales numbers are panning out?
So I think it has been a strong momentum over the last quite some time actually, 5-6 months. It has been pretty strong, and that basically, if you look at Maruti, I think the smaller cars have actually done well. So it does look like there is a sort of a certain amount of cash flow improvement in the rural segment, notwithstanding the stress that we are seeing on the agri sector, but it appears that the rural segment is actually doing well. Secondly, I think if you look at the Tata Motors numbers, they have also shown very strong CV sales. So I think that's a positive for Tata Motors. I think we'll have to really look at M&M going, Ashok Leyland, for instance. So Ashok Leyland might actually also surprise if it mimics the positive momentum that we have seen for Tata Motors CV volume growth. And the two-wheeler space also, if you look at Hero Motors, actually done well, better than expected. So I think there is a good amount of consumer-oriented spending that seem to be happening. So that's a pretty strong set of numbers that is coming around there.
Okay, that's the view coming in on the auto space. In fact, for Bajaj Auto, it's a double-digit growth, 23% higher sales for the month of March on year-on-year basis. But we're just minutes away from market opening, and we tell you all that you need to know to stay ahead in trade today. Maruti Suzuki March auto sales in line with estimates, whereas Eicher and Tata Motors they beat estimates, and Bajaj Auto numbers just came a while back. That too will be in focus.
ICICI Bank says its credit approval processes are robust and responses are full, and repossesses full faith in Managing Director and CEO Chanda Kochhar. The counter shuts down by almost 2%.
ONGC and Oil India will be in focus as government sets domestic natural gas price at $3 per MMBTU for April to September.
Tata Power sells its defense business to Tata Sons at an enterprise value of 20 to 30 crore rupees.
Bank of America Merrill Lynch sets Dilip Bilcon's price target at 1,244 rupees per share, while IDFC Securities initiates coverage on S-Chan with a price target of 520 rupees per share.
And finally, new listings, Sandhar Tech and Kada Construction will list on the exchanges today. Just 2 minutes to go for open. Let's take a view from a technical analyst. Meghana, anything interesting that you're spotting? Pre-open rates have actually settled down. What's your top idea for today? And anything other than that, anything interesting that you're spotting?
I like the chart of Titan Industries. If you see, the momentum on all three time frames has been bullish. The way the market has opened today and the way we closed on Friday, the last week, we had a candle pattern which had a higher shadow. So moving above this shadow would give a very positive impetus to the movement of the stock today. So Titan is something that we're tracking for today.
And what about you, Ruchit? Your top idea for today?
Darshan, since no auto space could be in momentum post these numbers, I think Mahindra and Mahindra would be one stock to watch out for. The weekly charts of the stock is quite attractive, and if we see the daily charts, then if the stock gives a breakout above 752, then I think on an intraday basis as well as for a short-term perspective, this would be one of the best buys in the auto space. So one can look to go long in Mahindra and Mahindra if it manages to cross above 752 in today's session.
So those are the two top calls coming in from our technical analyst, one on Mahindra and Mahindra, the other one on Titan. Remember, that's the one which will be entering Nifty in today's trading session, and also that's the stock which has been outperforming in the last, at least for this year when we've seen markets also weakening. But Meghna, just a quick view. I want a view on Wipro. That was the counter which outperformed on Wednesday's trade. Do you see any sort of long trade there?
Well, Wipro, Navneet, if you see, the stock is at a good support on weekly chart where it formed a shadow at a support last week at 270 levels. That did give a positive impetus, but having looked at the monthly chart, I think we're a little away from a major support. So I think the stock could give a decent run down for a few weeks to come till it finds support.
Right.
So till we see some signs of consolidation around 240 level, I think it's a little difficult
Meghna,
to get a hold of.
Okay, that's the view coming in on Wipro, but these are the initial rates. Nifty is open with gains of nearly 37 points, 10,150. Remember the 200-day DMA is somewhere about 10,180. Sensex opening with gains of nearly 100 points. And Bank Nifty, which is the one in focus today, has seen a bit of positive tick. Remember, our markets were closed on Thursday and SGX was open, so some bit of catch-up you'll definitely see there. But perhaps the broader markets, no major change as of now. So the flat opening for the Nifty mid-cap index. The BSE small-cap index has seen a bit of buying in the opening trade of around 100 points higher for the BSE small-cap index. And this is the heat map. We're seeing more of green this morning on day one of the FY19, at least the working day. GAIL is the top gainer. Vedanta continues to do pretty well. That's trading with gains of nearly 2.5%. Tata Motors, good sales number for the month of March. In fact, we're seeing positive ticks for the automakers. Maruti also trading with gains. And HDFC, the biggie, the heavyweight on Nifty, is seeing some positive tick, 1.5% higher for that one. On the losing side, this is the stock that we've been talking about, ICICI Bank, nearly 4.5 to 5% weightage. It does feature among the top 10 stocks among the Nifty constituents which have higher weightage on Nifty. So that's dragging the index lower. Axis Bank is also seeing some bit of negative tick. Titan, that's the new entrant, is seeing some bit of profit booking, I'll call it, because the stock has inched higher since the time the announcement came in that it will be entering in the Nifty index. But remember, this is the first jewelry company as well which is entered in Nifty today. But I want to highlight a few stock. ICICI Bank, let's just look at that stock closely because that's the one in focus. It has underperformed on YTD basis. Can it drag lower from current levels? We'll definitely get a view from Dhananjay on this. But for the time being, today's opening, almost 60 crore fine being imposed by Reserve Bank of India. And remember, we've not seen such hefty fines coming in from RBI. So that's showing a downtick. Your biggest loser among the Nifty constituents. The automakers will be in focus as we are getting the auto sales number for the month of March. So as of now, double-digit numbers coming in from Tata Motors, Maruti, Eicher posting 27% higher. And a while back, we also got Bajaj Auto close numbers, so watch out for all these counters. Canara Bank and Canfin Homes. These are the two stocks which will be in focus. In fact, they have been in focus in the recent past, where Canara Bank was looking to divest 30% stake. But now, due to the valuations they've received, that deal has been called off. And definitely in the Nifty reject, Grasim, Bajaj, Finserv, Titan are the three stocks which have entered into Nifty today. And the stocks that are out of it, Ambuja Cement, Aurobindo, as well as Bosch. So all these counters as of now are showing some bit of positive ticks. And I guess Darshan was right. When a stock comes out of the Nifty, we're seeing some positive ticks. And lastly, I want to pull up quality. Remember, this counter is down nearly 28 to 29% in the last two trading sessions. And this morning, once again, it was locked in lower circuit on Wednesday. It's fallen nearly 5 to 6%. There was some news that came in from at least the company side that one of the brokers have offloaded the shares of investors. So that's also showing a downtick of almost 7% in today's session. But Darshan, what are you tracking in the broader markets?
Quality continues to fall. There is Canfin Homes, which has fallen another 7% in trade. Wakrangi is on lower circuit. Videocon and ICICI Bank, both of them down almost 3%. Karnataka Bank is down in trade, so is Axis Bank. Some of the interesting counters, pull up Britannia. Britannia is at a fresh record high, so it's managing to do well for itself. Then as far as the other counter is concerned, Lakshmi Machine Work is at a fresh 52-week high, so that is doing well. You have Tata Steel, which has managed to inch up to the highs of the day. It's up almost 1%, so that is doing well. Bharat Financial again at a fresh 52-week high, so that is doing well for itself. So overall, that seems to be the trend that we are spotting at this point of time. Wipro has moved to the low of the day. ICICI Bank has moved to the low of the day. It's down almost close to 4% now. IndusInd Bank has managed to move into the red. Currently, it was trading with a positive bias. That's HAL, Hindustan Aeronautics, which is listed recently, again is moving to the lows of the day. So there is enough traction. And ICICI continues to bleed again, now down 4%. M&M has slipped into the red. That's what we are seeing right now. Among the other mid caps which are managing to move on in trade today, Infosys has managed to move into the highs of the day. Jubilant Life Sciences and Marico have moved to the highs of the day. So that's the current trend that we're getting in from the markets currently. That's what we're seeing. Dhananjay, any view on the banking space? What we've seen, PSU banks have bled. Now the focus is shifting on the private banks. ICICI is down almost 4%. What's your view on the banking space now? Is it time to ensure more caution, or valuations have become attractive?
So I think, I think the issue with respect to the banking sector is actually moving from PSU banks to the private banks, especially the corporate lenders, and hence I guess the market will gravitate more towards more quality names within the banking sector, such as HDFC Bank, Kotak Bank, IndusInd, etc. So I think that's another thing. So I think the market will sort of start truncating the entire banking space. As far as the private lenders such as ICICI and Axis banks are concerned, I think there are issues which have been raised by the regulator, especially in the case of Axis Bank, and we all know what is happening in ICICI Bank. I think as far as the market sentiment is concerned, these two developments are definitely a dampener. So basically, the stocks will be under pressure for some time. But we have analyzed this, especially for ICICI Bank. We believe that it's not worthy a development to actually impact our numbers or multiples. So we continue to remain positive on the bank from a growth standpoint and provisioning standpoint. We believe that credit costs will reduce going forward on a standalone basis, quite apart from whatever is happening with respect to the governance issue which is being raised. So I think once that thing is resolved, I think it will create value. So I think currently, if the stock is actually correcting, there is a certain level at which it will become a sort of it's close to a level where it starts providing comfortable value if we have to consider the stock for the next 1 or 2 years. So I think that's a call on the recent development. overall, I would say that private lenders, I think the mega theme is that private lenders will continue to grab more market share. Quite unlike the PSU banks, I guess in case of private lenders, there will be more quick actions going forward, which will be sort of reassuring for the investors.
Okay, one more brokerage has initiated on Avenue Supermarts. It's JM Financial with a target price of 16.75. The counter is up over 1% in trade. Lancelot, Avenue Supermarts is something that what will you do? Will you look at growth, or valuations are too expensive for someone to enter into this counter?
Well, I would consider that valuations are a bit expensive to enter rather than the growth, because the growth can be at these levels. Growth can be can easily have negative surprises at some point in time, and that could again because of the high valuations see significant impact on the stock price in the medium term. So I would actually not be in a hurry to buy, but wait for a serious correction and then look at this company, because I think valuations are stretched, and with that high valuations, the risk remains becomes much higher at this point in time.
Well, nothing seems to stop the stock from scaling higher, at least for Avenue Supermart. We've started the new series on a note where volatility seems to be on the higher side, and remember that's the theme that everyone's been talking, that volatility will be higher not only for the Indian markets but also for the global markets in 2018. So India VIX is trading with 2.5% higher, and clearly I think the numbers which have come in from the auto space is auguring well, because the Nifty Auto Index is one of the top sectoral gainer as we speak. Dhananjay, I wanted to get your view on stocks like Canfin Homes and also Canara Bank. For the longest time, Canara Bank was trying to divest its stake in Canfin Homes, and now it's called off that deal because maybe they didn't get good valuations. At least that's the reason that has been cited. What's the stance on these two stocks? Because we've seen a huge correction for Canfin Homes in the opening session today.
No, I have not studied that very closely, so I don't have a view on that at this juncture.
But overall, Dhananjay, what's the view on the NBFC space? We did see the bond yields inching higher, but some respite was seen after the the numbers which came out for first half of FY19 for the spending of at least by the government. So we did see some bit of cool off by the bond yields, but the sort of outperformance that one has seen for the NBFC space in last 1 year, do you think we can continue to see the same sort of performance?
So I think, yes, you're right. Actually, by end of the year, the government had come up with a leaner borrowing schedule for the first half, and that has created a sort of a respite for the bond market. So the bond yields actually came down. So typically, the NBFC stocks actually reacts inversely to the bond yield. So a lower bond yield essentially is symptomatic of expansion in margins for NBFCs, because a lot of NBFCs run significant asset liability mismatch, borrowing short and lending long duration. So that gives a very good advantage. So I think a reduction in the yields actually is a positive for the NBFC in the short term. But I am not sure whether this is something that will persist going forward, because we believe that the action by the government to reduce the borrowing is only increasing the burden for the second half of financial year 19. So I believe that the yields will continue to increase or go back up again, especially in the context that global yields are also on the rise. So I think there is a short-term respite that is there for the NBFC space. I would stay away from asset-backed NBFCs, especially housing finance companies, where we believe that the spread might still be under pressure. So if I have to be in the NBFC space for valuation's sake, we'll look at retail lenders or diversified NBFC companies. So that is our view for the NBFC space.
Dhananjay, any view on Fortis Healthcare? Now that the news is officially out, what exactly is going to happen? What should someone do on Fortis Healthcare?
See, we are not very sure about the outcome and how it benefits the minority shareholder there. So our take has been that one should actually stay away from the stock. There is still a lot of unknowns there and uncertainties there. So I think we are staying away from that stock at this juncture.
Lancelot, anything interesting that you're spotting for FY19 that someone should hold for a one-year perspective?
I think the capital goods space is becoming attractive because we are seeing a lot of capacities build up, reaching the 85-90% capacity utilization, and hence there will be some capital expenditure also coming in from the private sector, apart from the increased capex from the government sector. So given that background, I think companies like L&T, AIA Engineering, and a couple of other in the engineering space will see increased orders, and they will be able to generate higher profits, as well as valuations are reasonable because these stocks haven't run up significantly in the last 6-8 months. So this could be a good opportunity to buy them and hold them for maybe a year.
Okay, that's the view coming in on the capital goods space. But the top gainer on Nifty right now is Tata Motors on back of those March sales numbers that we got, and also an upgrade coming in from HSBC. Dhananjay, Tata Motors for, okay, I think Dhananjay has left. But Lancelot, I want to take your view. For the longest time, this is the cheapest company which is available among all the Nifty constituents. And we've not seen any sort of, even if you look at the December quarter numbers, there was some bit of disappointment which came in from at least the JLR front. Do you think at current valuations, it can be a good buy in a portfolio if somebody wants to buy for the next 1 to 2 years?
Yes, I think investors can look at Tata Motors because valuations have come off significantly. Most of the negatives of the JLR numbers have now got factored into the price, and we are seeing improvement as far as the passenger vehicle sales are concerned, as well as the CV segment. So I think Tata Motors domestic business will continue to grow, which was actually the lagging part of the business in the last year. But and the negatives of JLR have been factored in. So at these price levels, I think it is an attractive option, because I think over the next 1 to 2 years, we should see improved performance from both JLR and the domestic business, which should ensure that Tata Motors stock will give good returns going forward from here as well.
All right, Lancelot, thanks a lot for joining us today and taking us through your views on the markets. And on that note, we'll wrap it up here at least. But on the other side, don't go anywhere. Meghana Doshi and Ira Dugal, they discuss PNB's need to account for the 13,000 crore fraud with the managing partner of PKF. And also, they will be discussing Biocon's plan to grow in the biosimilar space with the CMD of the company, Kiran Mazumdar. Stay tuned.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
RP Sanjeev Goenka Group, growing legacies.
Welcome back. You're watching Indian Open as we get into the last half hour of the show. Couple of specific conversations coming up. We'll be welcoming in Kiran Mazumdar Shaw of Biocon briefly in a minute or two, talking about the broader economy and also her business. But we'll start off this half hour with a conversation on Punjab National Bank. The bank has said that it will be making good on 6,500 crore in fraudulent LOUs in the fourth quarter. The remaining LOUs will be made good as and when they come due. But how will this be accounted for? Joining us now is Mr. Santhana Krishnan, Managing Partner at PKF, to help us understand this better. Very good morning to you, sir. Thank you so much for taking the time to speak to us. So, you know, this is a slightly sort of tricky issue because these were contingent liabilities on the bank's books. We just want to understand, and, you know, basic question to you first. How does the bank start accounting for these? Because it has said that it will make good on 6,500 crore immediately. Excuse me.
Under the present accounting standards, as well as the accounting principles that all countries follow, it's not with reference to India alone, across the world, is the moment of the loss is determined and you know the loss, you provide for it. You don't wait for the next quarter to come, because when you know that a fraudulent action has taken place, you take the whole of the losses and account for it in the same quarter. I don't think any accounting principles are there which will allow you to defer this to the next quarter. In my opinion, PNB will have to provide, will have to look at all those LOUs, see what are bad, and they will have to provide it today itself. Conservatism in loss making and provision for loss making.
I'll get to the RBI circular, which does seem to permit 4 quarters in a minute, sir. But very specifically, so if you look at the PNB balance sheet, it gets deducted from the reserves and surplus first, because the RBI circular seems to say that you have to account for it in a manner that you adjust the reserves against this. This was a contingent liability after all, sir.
It was a contingent liability as far as the transaction is not fraudulent. If it is fraudulent, it is no longer a contingent liability, it is a crystallized liability. There is a distinction between a contingent liability and a liability which is arisen. When you had an LOU, it was a contingent liability. When you find an LOU is fraudulent, it is no longer a contingent liability. Second, the regulatory forbearing or regulatory override does not override accounting. The regulator may say, in order not to create panic in the market, you provide over 4 quarters. But in a fraud transaction, it is never done in a 4 quarter. Even the RBI circular should be looked at from a fraud angle and not from a circular which is generally applicable. For example, you provide for the gratuity, which is 20 lakhs now, you provide additional gratuity liability during the current year. You may provide it over 4 quarters because it's applicable throughout the year. But a loss which you have made is not applicable over the whole year. It has to be provided for in the quarter in which you determine and cannot be deferred, even according to this RBI circular. And removing it from the reserve and not routing it through P&L account is more a regulatory override and not an accounting override. Regulators have a right to determine how to account it, but accountants need not necessarily agree with the regulator's view.
So
I hope I've made it clear.
Yes, but just to get a little bit more clarity, so when the PNB numbers come, where do we see it? We see it in the provisions, we see it in the other liabilities part on the capital liability side of the balance sheet, sir?
No, it has to go through very clearly the P&L account.
Yeah.
We will say provision for fraudulent transactions because it continues as a provision until finally it is determined. So instead of 11,000 crores, it might become 11,500 or 10,000 crores, depending on how much you will be able to realize from Nirav Modi. Therefore, yeah, it remains as a provision for expenditure or provision for fraudulent transaction. That provision is shown in the P&L account as losses after provisions, and that is adjusted against the reserve. There are very, very clear accounting methodology adopted for this. Accounting principles do not allow you to adjust anything against reserves directly. It has to go through P&L account because losses for the current year includes these fraudulent transactions.
So will there be a distinction, sorry, last question to me before I throw it over to Menka. Will there be a distinction between the 6,500 crore that they've said they're paying out immediately at the end of this quarter and the remaining amount which will come due, and how the two buckets will be accounted for, sir?
Completely no. There can't be any difference between 6,000 you have determined.
Yes.
4,500 you have identified, you are yet to determine the full amount. That's only more of a semantics. You know that the entire liability is going to come. So you have to provide only the quarter in which you identified.
Okay, so the 6,500 crores approximately would have to be accounted for in the quarter ended March 31st. The remaining will be accounted for in whichever quarter those LOUs come up for, some sort of whatever fulfillment, if I can use that word, sir. And accordingly, we'll see those losses take place in subsequent quarters. Is that a fair understanding of it?
No. No. I'm saying the entire 11,000 crores will have to be determined in the current quarter. You will say that in the balance sheet, 6,500 crores has been determined.
Okay.
4,500 crores, which are maturing in the subsequent quarters, are under process of final figure being crystallized. But you will have to provide 6,500 definite and an approximate amount for 4,500 crores. But in this case, bank will know exactly the amount. There is nothing which is going to change in the next quarters. It is mandatory for you to provide it now.
And as and when you recover from Nirav Modi or the entities involved there, then you write back? Is that how it works?
You can write back saying I am a recovered amount out of the fraudulent transaction.
Okay.
Even RBI says frauds will have to be provided in the same year.
So we're talking about taking the full 11,000 or 12,000 crores, or now it seems to have gone up to 13,000 crores will have to be accounted for in the March quarter. In the March ended quarter, let me put it that way, the fourth quarter. Wow.
Yeah. Supposing had this transaction been found out in the first quarter, RBI would have permitted you after a disclosure to provide over 4 quarters. But you can't escape the current year. It has to be in the current year.
Okay. And all of this, as you pointed out, will have to go through the P&L. I understand that as well. So we're looking at a very massive profit hit, at PNB on account of this.
Absolutely. This will be inevitable.
Okay. I have one more question, sir. Maybe some of these liabilities will come to light. I use the word liabilities loosely, not in the strictest of accounting audit words. But some of these liabilities pertaining to this fraud will come to light only in subsequent months or quarters. Now, I don't know if we have any clarity on the application of Indian accounting standards to the banking sector. It was supposed to kick off this month itself or this financial year. Will that change anything?
No, it has to kick off only. There are very clear accounting principles involved, whether it is a bank or insurance or a private sector enterprise. Even RBI circular very clearly says a fraud will have to be provided in the same year. Only thing is, it is permitted, as I called it, as override, regulatory override, to provide over 4 quarters. That does not find favor with the accounting principles. Now, in accordance with the internationally accepted accounting principles, you will have to provide in the same financial year and in the same quarter in this case.
So you're saying the implementation of Ind AS, which is the IFRS version of Indian accounting standards, that will not change any of what you've already explained to us, which will be the potential impact. That will only exacerbate the potential impact.
In fact, the little ambiguity which one could have had because of RBI clarification is also lost, because Ind AS is absolutely clear. It is exactly in line with what we were following earlier also.
Okay. Mr. Santhana Krishnan, is there anything else that you would advise us or rather advise investors and stakeholders to watch out for in the numbers, as we try and understand the implications of this fraud on the financials of PNB in this quarter that's just finished and the quarters to come?
PNB is certainly going to have not only the problem of this fraud, also a huge book that they have. Consequently, they will have a huge amount of NPA book also is running. The investors may certainly have to look at their restructured debts, their CDR. Most of the restructured debts and CDRs don't really come back. They are only deferred because of no other option. So I think investors will have to certainly look at not this fraud alone, which indicates very poor internal control. I'm not saying other banks may have a better control, but at least in this case, they have been taken for a ride. And big NPA book that is possible also will have to be certainly looked at. And the amount of jewelry exposure or sectoral exposure, I may say, the sectoral exposure is large. The problems of the sector will also come on to PNB's balance sheet.
So just one last quick question. So on the capital adequacy side, sir, this impacts the CET1 ratio, sir?
Certainly it will impact the ratio. All ratios will be impacted.
Okay, got that, sir.
Okay, so one final question actually before we let you go, Mr. Santhana Krishnan. There has been a lot of conversation on the responsibility of both the internal and external auditors in having failed to detect this huge liability, to a creditor that wasn't even recognized as a creditor, by the bank for many, many months and quarters and maybe even years. In your assessment, where does the responsibility lie? What should regulators be looking at? Internal auditors, external auditors, the full bunch?
I think, though I belong to the auditing community, I have to be forthright with you here. If we are going to say, I agree that it's very difficult for auditors to find out. But what is important is, I think we had Arshad Mehta, we had Ketan Parekh, we had Satyam. Every time human ingenuity finds a new fraud, we all come back and talk about it. The auditing community will have to improve. Certainly, if the auditors are going to say they are not responsible, investors may ask you, why have an audit at all? The reason for having an audit is to find out this. But to be fair to the auditing community, SEBI as well as the regulator must prevent the auditors from doing it in 3 days. There is an enormous ego trip by everybody saying we want to finish the audit in 3 days. We want to finish the audit in 5 days. We want to print our balance sheet on April 15. I don't know why we should be doing all this. The problem is shrinking timeline for audit and quarterly announcement of results is certainly taking a toll on the quality of the audit. 1. 2, the auditors will have to continuously look for fraud-prone areas, change the method of audit, rather than saying the audit cannot find out. I agree, today's audit system may not find out, but investors are not worried about it. If you can't find this out, why have an audit could be a legitimate question by the regulator, by the government, and also by the investors. I think auditing community will have to change the method of working and will have to detect such large-scale fraud. I can understand 10,000 rupees not being found, but 11,000 crores certainly wakes up every citizen of this country questioning where are we and what are we doing.
We appreciate you joining us this morning with your thoughts, Mr. Santhana Krishnan. Thank you very much. Surely not going to be the last word being said with regards to the responsibility of the auditor. Let's move on to our next big conversation this morning. Biocon's just got a shot in the arm with the European and Australian pharma watchdogs giving their approval for a biosimilar used to keep blood sugar levels in control. The medicine, which is jointly being developed with Mylan, has an approximate market size of $1 billion in Europe. Joining us to talk about this particular medicine, other biosimilars in the pipeline, the prospects for the business, and of course the economy as well, is the chairperson and managing director of Biocon, Kiran Mazumdar. Also joining us, of course, here is Darshan, who understands Biocon better than any of us do. Kiran, good morning. Thank you very much for joining us on Bloomberg Quint. I know we have a bunch of questions on the product pipeline, on the regulatory situation. But before we get into that, we've just begun a new fiscal year. We're going into an important election in your state. In a few months from now, very quickly, we will look at other elections. Next year will be the main general election. So the environment around us is fraught with economic news and political developments. From where you sit, how do you see the economy today?
Well, I do believe that, we do have challenges in some of the economic, metrics that we are sort of judging ourselves by. And I believe that, job creation is a big, big concern. I think GST is also, something that needs to be tweaked very, very rapidly, because you can see that GST collections are, not really reflecting the potential of what India Inc. Must do to really move the economic needle. And I do believe that we have many sectors which can be very buoyant sectors, provided we have the right policies in place. I know that, for instance, our own sector has had to basically seek a lot of clarificatory measures in terms of policies, which have actually dampened some of our business opportunities, made us less competitive. No doubt the government has responded to this positively, and I hope it's rolled out very fast, because I think course correction in a timely manner is going to be of the essence. And the longer we take to address certain economic challenges, I think we are going to really start facing the heat. So personally, I believe the government must concentrate very strongly on a lot of these economic challenges that we are facing today. Every sector is fraught with its own set of challenges. So I think it is important that the ministry is concerned actually put in a concerted effort to do course correction rapidly, so that the economy can come back onto a very strong keel.
Okay, fair enough. I have one more macro question for you before we get into the more specific points on Biocon, and that is, you've always been very candid about your political views as well. Are you disappointed that this government, which came in with an extraordinary mandate and very, very high popularity, has possibly not been able to deliver on the economic agenda that people like you hoped it would?
Well, I think there is some truth to that statement, because I believe that, we were expecting a lot from this government, and I think, the India Inc., for instance, certainly expected a lot of strong economic reforms. Unfortunately, this has taken a long time, and even the reforms that, that have been announced are not being rolled out in a timely manner. There is still a lot of tweaking to be done. I have been very vocal about the fact that GST is one of the biggest game changers for this country, but it hasn't been rolled out in an optimal way. I think course correction has to be very rapid if we are really to see the benefits of many of these economic reforms. And personally, I think we have seen a big hit in the job market. I know that many sectors, are not speaking up, but I know that they are very concerned. I know that the garment industry, for instance, is very, very concerned about what's happening to their own opportunities. I know there's been huge amounts of job losses on that particular front. I know that the whole healthcare sector, the hospital sector, is very concerned. Just yesterday, I was talking to a private hospital entrepreneur, and he was telling me that, the way the government is clamping down on price control is not going to help this particular sector. So I think, in our anxiety to please the Aam Aadmi, and in that earnestness to do that, where the government does not take any responsibility but basically passes it on to the private sector, is not a healthy sign. And therefore, I believe that the kind of reforms, the kind of pro-business policies that we were all anticipating has not happened to the level and extent that we expected.
All right, fair enough.
Okay, Kiran, the big news that came out on Friday was the marketing authorization of your important drug assembly in EU and Australia. So what's the way ahead now? How do you plan to monetize these two drugs in these two geographies that you got the approval in?
Well, as you know, this drug has been developed in partnership with Mylan, and Mylan has the commercial responsibility in the regulated markets. Mylan being a very successful market-facing company, I'm sure they will do everything that it takes to get an aggressive entry into these markets and get a good market share.
But what about the launches?
The plan is to basically enter these markets.
Yeah, go ahead.
Yeah,
go ahead.
I think the plan is to enter these markets. The plan is to enter these markets in the second half of this year.
Okay. But what's the strategy like? Will it be more of an aggressive launch that you're looking at, or will it be gradual? Because EU has almost 28 countries that are there. There are other member countries also. So will it be an aggressive launch that you're looking at, or will it be gradual and phased manner?
Well, as you know, even though Europe has these many country registrations to basically undergo, the fact is the key markets are about 5 or 6, and I'm sure Mylan will be addressing those key markets in the short term or the near term, and then gradually roll it out to the others. So I think that will be the strategy.
But what has been the response in places where this drug has already been launched? Because it has been launched in places like, Japan, Russia, some of the emerging markets. What's the response like to gauge a sense of how this drug is doing?
Well, all I can say is that, yes, this drug has been approved in many, many emerging markets. Most of these, approvals have come very recently. For instance, Russia, only recently approved our Glargine. Korea recently approved our Glargine. We have been in the market, for instance, in Mexico for several years now, and we have a pretty commanding position in Mexico in terms of the Glargine market. We have entered into the UAE market, and we are making good progress there. Japan has been another market where, it is not a big opportunity. It was more symbolic to be in Japan. We expect, the Japanese market to basically be a small market for us in terms of the overall global opportunity. But really, the big opportunities are now going to be in US, Europe, and Australia, New Zealand. I think these are where I think Mylan is strong, and we believe that Mylan will make a very strong effort to get a good market share.
I'll take it from there, because US is an important market. So when can we expect more clarity to come in as far as the US approval is concerned? And secondly, what's the update on the Open 483 that is still there on the Malaysian facility?
Well, as far as US is concerned, there is a 30-month hold, as you probably know. And, as far as the Open 483 in Malaysia is concerned, I'm sure this will be closed out long before that. The CAPA has already been submitted to US FDA, and I think that will be closed out fairly soon. At least that's what we hope. But, what is more important to consider in terms of the US launch is the 30-month hold.
Kiran, I just wanted to come in with a couple of quick questions, a little away from Assembly, and that has to do with, I know that you have in previous conversations, as also reported by my colleague in Bloomberg, said that you're looking to sell part of your stake in Syngene. Has there been any progress in that conversation? Is there anything new that we can, sort of know of in that process?
So let me clarify this particular question that you've asked me. Okay. I said this is one of the options we have. Sure. Because I think someone asked me, how expensive is it to develop biosimilars, and we have an extending biosimilar pipeline. You know that we recently announced that partnership with Sandoz, and obviously these are very, very expensive products and programs to develop. And I think the reference I was making to was that we have many options to raise capital to back these kind of expensive developments. One of them being a stake sale in Syngene, but I did not quite deliberate on that, and I mean I just mentioned it as an option. I don't think we are in need of raising immediate capital that demands a stake sale in Syngene, but we have many options to raise capital, and we will come to that choice when the necessity arises.
Okay, fair enough. You also said, I think, in a previous conversation that you were expecting the European drug regulator to re-inspect the Bengaluru plant. Any progress on that front or any news to report on that front?
Yeah, it has been inspected, but we are still waiting for the report. And once that is, received by us, we will certainly, let that be known. But hopefully, we will see how they have viewed this particular inspection, because I think they have looked at all the modifications and improvements that were made based on their previous inspection.
Kiran, it's a new fiscal, a lot of triggers ahead for Biocon. So wanted to know your views on that. First of all, is the target action date for pegfilgrastim that is coming up shortly? What are your anticipation? And the anticipated approval for trastuzumab in the European Union will probably come in the second half. So how will all this play up for Biocon going ahead?
Well, as you know, as a company pursuing biosimilars, we are the only company really addressing global opportunities out of India. I think this is an extremely crucial year for us. Last year has been a great year for us because of the trastuzumab approval that we got from the US, and of course we've ended the year with the Semglee approval from Europe. So that has absolutely got us off to a good start. I think this year we expect many more approvals like you've just mentioned. And I think biosimilars is certainly a business strategy that has worked well for us. We do not see aggressive competition for many years yet, because I think it's only now that many companies have started investing in biosimilars, and by the time these programs are developed and brought to the market, we know that it will take a few years yet for many of these companies to really start catching up. So I think from that point of view, we are very pleased that we are amongst the front runners, and that actually gives us an early mover advantage. I think having a partner like Mylan has been extremely good for us, because we are very confident that Mylan is going to look at the commercial opportunity in a way that really focuses on getting maximum market share. So we're looking forward to the next few years as being bonanza years for Biocon. I think we have basically vindicated ourselves in terms of making these big bets and big investments into biosimilars over the last several years. And I think today investors are beginning to feel very positive about the business model and the business strategy that we have adopted.
Kiran, one final quick word before we wrap up the interview on Semglee. Morgan Stanley believes that you could generate $70 to $100 million top line in two years. Is this something that you are working with?
Well, I think that's certainly very doable. I think the opportunity is much larger, but I do believe that that's a very doable target.
All right, Kiran, appreciate you joining us this morning. There are always more questions to ask and there is time. Thanks very much for you finding the time to speak with us here at Bloomberg Queen. We're going to have to wrap up the show at this point, but before we go, a quick note on what's going on with the ICICI Bank stock, now down a little over 6% in trade. We'll bring that up for you. That's a conversation that the F&O show will take forward. It's coming up next.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार,